Okay, and you're out at 940. Okay, 1040 to take $450. Look at, I need to see where the stock, okay, the stock, if it breaks above 297, cancel it. But it's got to break through it. Clean. All right. I'm going to record that we bought, and I want everyone to know that this is a Google $550 call, 116 of 2010. They were 2110. They closed at 17. I paid up. They were 2110. My entry, which you can see right here, here they are. Here, let's get this correct. You can see that my entry is right here. Here's the symbol, GOPAY, GOPAY. The highs of these contracts were $21.10, and I bought, our cost on this 5 is 19.233. So I saved $3,000 on the entry of the contract. Here, hold on. Let's put this contract up here higher. Okay. Here is Google, and the high of the contract, darn it. All right, here, let's do this. The highs were 2110. I bought at 1920, 15. I saved $3,000 on my option entry, okay? Because the reason why is that here is our entry. If I end up, and we already own 10 contracts at 24.50, that's a 490 call that expires. GOPLK, we own GOPLO, that's a $500 call, and we're up almost $45,000. At one time we were up, but Google pulled back right here. Google pulled back off its swing highs, and that dropped this contract down. So if I take profits, near-term profits, or if I sell half of this position, I've added 15 call contracts. Google's trading at 521. It was at 525. That's $30 up above the strike price, and I've given myself 90 days. Reports earnings on Thursday, and I even give myself the next quarterly earnings. But just in case there is a huge pop, if I was to take all of my profits here, $45,000 or whatever it is, when it gets back up there, if I were to take all of my profits here and we gap big, I still got some contracts. And I even went out further than what my December was. These are all December 09. I bought January 550 up and out of the money. And that's based on the fact that if we keep running higher into Google at a certain place between now and Thursday, we've seen that big high, 516 to 525. And we've seen that closing price on Friday, and we've seen Monday's high. Then the markets sold off in the indexes because they made double tops and whatnot, and these other stocks fell down with it. So basically, I added that position, and we have recorded that. Now I'll stop the tape, kickoff. Now, why I'm recording this, this is a 550 call contract on 1016. They went from 30 down here, and they lost $8 in value because they were bloated. They gapped, and they sold off on 1020. Today is the 23rd, people, and this is a 60-minute call chart over the last several days. So, bam. Okay, and we pull back again. And this is some of the differences that these calls are making their runs kind of like CME. See the top here on the 21st? But look at what happened. They were viable down here. So, of course, we're going to gap up. And 26.50 on 5. And the other 5 remaining for the day, as always, is let's put them down here at 24.50. And that's down at the bottom, just for today. I mean, we get 5 at the wholesale price, fine enough. We'll take it, because we will. And because it's going to gap up. So here, let's get this straight. So let's understand, once again, as an SMF power option trader you are, all of you, is that the stock closes at 554. That's got a little bit of a gap. So that means that these are going to hit up on the high, and then they're going to pull back. So the bid, 26.50, 24.50, 5 times 5 at each price level. And basically, there's a trade off of them, and then there would be another scalable feature, is that if we ever did get another opportunity to get them down here at 22.5 by 23.5, 22, 23.5, and build the whole thing out, but building more down in this area here. So basically, they'll probably run it off of the gap. That's the Google call entry. That's what we need to do here. This is a great 60-minute call chart. January 550. And you can see where the volatility has come back in the options market. Nobody thought, and of course people didn't sell them there, but then look at the breakouts. And this is going to happen a long time, for the next couple of months, when the Google pulls back with the monthly buy signal on the chart, and the contracts pull back, the equity pulls back, calls need to be bought. That's the trade.